Hello, everyone. Welcome to today's session. Let's get underway today. We'll start out with current market conditions as we usually do. We've got markets still just continuing that overall stomp higher. Momentum has shifted back up into that bullish trend zone. We're seeing breadth, which is slightly improving, staying slightly positive, nothing spectacular, but it is on the bullish side of things. And then also sentiment right here, we're seeing sentiment, which is reaching pretty lofty heights right here, but that can continue to do that for a long time. So that's overall, that's good for the market conditions where there's just still a lot of complacency, a lot of buy the dip, a lot of greed out there, which ultimately creates additional demand for stocks as long as those trends are higher and that sentiment is higher. And then we have underlying factors that are helping, like the earnings reports and economic reports, things like that. Let's take a look at buy-sell ratio right here. As I mentioned, it is positive 1.29, and so you can see the green is above red. That is really, if you have any buy-sell ratio greater than 1, is going to have the green above red like this. So still, not a huge amount of participation in this last part of this rally or whatever this is right now. This could be, we could flatten out right here a little bit more, potentially create some additional breadth on a possible breakout and rally from S&P 500, just this smaller pullback, some support. It's trying today, and so this has been actually a really so far a pretty sustainable trend of this rally, where we had this breakdown right here, and then really it's just been kind of hugging that upper trend line and moving along here in this direction as well, and then finding the support. So not a lot of big sell-offs, huge rallies, as well as just been relatively orderly, which has been nice to take a little bit of the volatility out of this current trend. Again, that being said, we're at the upper end of the range. We're at all-time highs, and we want to continue to trade that direction until that trend reverses. And but at the same time, when we reach the upper end of these ranges, we know that we do get some reversals. So this trend has just been so incredibly strong since the fall, and just continues to do so and continue to be strong currently. Let's take a look also at bonds. I'd mentioned bonds this morning. They had been strengthening, continue to strengthen right here. If I take and go like this, a little bit different perspective there, where you can see that support inside around that 50% retracement, 50% retracement of this swing high point and this swing low point. That's what the Fibonacci tool is snapping to. This box right here, when you select that, that is your Fibonacci tool, and it's going to automatically just draw these locations for you. So when you get into some of these ranges that become significant areas, and then we want to pay attention to them, especially if we have a 3-part counter trend. That's pretty common. Deep retracement, 50%, find some support. What this means, because we're talking about TLT, is it means interest rates would go lower. As bonds are going higher, interest rates are going to do the opposite, so interest rates would go lower. So the bond market might be anticipating, flat to lower rates right here. We'll see. I think equities would welcome that as well. So we're seeing, kind of this scenario that's panning out a little bit slowly, but nonetheless, it is panning out in terms of potential for lower interest rates. Let's look at sectors here. We have, as of yesterday, we saw, some strength across the board for the most part, and a couple of little smaller hiccups here. Real estate is really trying, and there it goes today. Okay, so we get a pop above this today in real estate, this potential reversal trend. So real estate and bonds and interest rates, and they're always interesting to follow those chart patterns and see how similar they end up reacting to each other. So we'll see if interest rates, this is IYR, which is real estate. So that's including a lot of different sectors in real estate as well, versus just home builders. But we also know that if we go to sectors into the sector scan, we know that construction is still the leader. And so inside of that, you're seeing engineering, you're seeing building and construction names, like the home builders for the most part. Some of these other names are not going to be as familiar, but those are the trends that are continuing to work. And lots of nice looking stock charts. Lots of stocks in the above 90, continuing to move higher. Those are the ones that ultimately we want to be spending time on, or 90 and above. For any of the sectors, we can go in and break that down by sector. That was kind of what I wanted to go into today in terms of just a little kind of a how-to update on or training on the site itself. Is when you're looking for the most part, we're utilizing the muscle stock scans, the new buy, because it includes all sectors, it's including all industries. It's just basically pulling in the highest rank stocks with new buy signals and a couple of other factors here down at the bottom. It's going to explain exactly what those factors are. But if you wanted, and same with some of these other ones, muscle stocks or just all of your strongest stocks, anything that's in the 98 and higher. So these are the ones that are really moving. Everything is moving straight up, but we also get pullbacks inside of some of those groups as well. This was a stock here, APLT. It was a new buy back here, but what was interesting about these, and this is an interesting practice to go through and watch some of these stocks sometimes, because this was the day right here, okay, and this day it was up like 40% and the volume was huge, and it was towards the upper end of the chart. And so you see a massive move like that where it's up 30 or 40% and it's huge volume, and you think, it's going to pull one of these on me, it's going to retrace and move all the way back down. And sometimes that can happen, but in this case, it just went, and I find myself often just not wanting to get into some of these because the stop has to be so low. If it's a 40% move, my stop, I've either got to have a really small position size, or I've got to have a really wide stop, or I have to have a really tight stop that can still pull into the body right here. So sometimes I'm like, I can't set up a technical trade the way that I like to with the stop loss down below. In fact, let's see if I can pull that in, and we'll just take a quick look. And I've got a point here. But if we go, let's go to a $100,000 account. So if I were setting this up, and let's say I'm going to change this number back to here, back to 375. And if we did, 500 share, not 5,000, 500 shares, that's a percent, 1.8%. So we could go 600 shares, that's 2%. Our stop price right here, I would want it to go all the way down to that low, or at least the low of that day. So let's call it 272 right here. So again, my point is sometimes these kind of stocks get past me because of the distance right here. So in order for us to set up that stop loss, that's a 27% stop, and that's too big of a position. I need to go by half of that number to get back inside of my acceptable range. So what I typically have to do though is take this in half and go take this all the way down to 300. Okay, now I'm inside of an acceptable range, and the position size on this ends up having to be, let's delete the stop price. The position size is only $1,000. So that can still be okay. And that's one of the ways to never have FOMO, never miss out on some of these that have really good patterns, breakout patterns, and big volume, is still set it up this way. You just end up with more positions. You just end up with more trades going on at the same time, and that's fine as well. When you're using the wheel methodology, if you're adding in and buying something new each day, then it's okay to buy two that day, maybe with smaller position sizes here as well. So it's still possible, because sometimes we do miss out on that next day. It goes up 40% one day, it goes up 80% the next day, and then it kind of flattens out right here, doesn't do a whole lot. Now it's in a little bit better pattern where it's slowing, but then it retraces, and then boom, you get another big move. So from $3, $4 to $8. And a lot of times when we're going through scans and we see this pattern, oftentimes we forget how this pattern looked, this one right here, how that looked when it was sitting up here. Okay, so Point being, if you see some of these trades sometimes and they're big movers and there's massive volume and they're starting to break out, don't let that scare you away from taking a trade, because they can turn into some massive winners here in a really short amount of time. And there's stocks in there that are like that every day. Case in point, I don't think I had it in there. Was it? I can't remember the symbol either. It was in there yesterday. A really volatile, really jumpy stock. I'll usually pass on those as well, just to keep things a little bit more consistent. So you've got these options here. Each of these scans are different criteria. Smooth sailing is a different criteria. These are already buy rated stocks, $10 or higher. They have a rank of 90 or greater, average volume of 1 million shares or higher daily. Okay, so these are really, they're moving, but they have an average number of shares traded that is 1 million or more. So you're getting these big name companies, and that's fine. A lot of times these stocks can really continue to move and do great, but they they're not quite as volatile because there's so many shares that are traded. If there are less shares traded, oftentimes that means you can have these big run-ups quickly and then immediately get those shares sold, and then it immediately reverses. Some of these stocks that trade a lot higher volume in shares don't do that as much. So smooth sailing is also a good group. What it doesn't do is it's not telling you the new buy signal. Okay, it's telling you that it's already a buy signal. So that's fine as well. So if I wanted to take this scan and I wanted to customize essentially this process into the new buy, then I would go into my screener. I would create my scenario here that is, essentially $5 or higher. Let's get rid of all of this because all I want is a stock that's gone from hold to buy. I do want a current uptrend, and I do want rank of 90. Let's go 90 or better. But I want to change this number. My volume, my minimum volume needs to be 1 million shares traded. Okay, so now essentially I've created a new buy scan. It's where my signal change has gone from hold to a buy. My long-term trend is up and my rank is 90. Okay, now let's sort that and see if there's anything in here. Okay, so we're getting, in this case, we're getting some of these stocks now that are they've got a lot larger number of shares, and they've just gone from a hold to a buy. There's not going to be as many of those. Here was one COCO, because the criteria is so much higher than everything in that database. Okay, so the difference between 7 stocks and the smooth sailing scan, which has currently got, I don't know, it doesn't say, but there's a lot in there just because these are all already in uptrends. So that's okay, because oftentimes you will get a pullback in an uptrend that it never does move back to a hold signal. For example, I don't think right here on this uptrend, this pullback, it maintained this upper zone, but it still had a pullback and it still moved higher. So you can also utilize the scans to go in and look, just scan through them and look for pullbacks. Oftentimes in the morning, that'll be I'll grab a quick muscle stock scan and go in and look to see if any of the stocks in this list are retracing. Okay, and let's see if we can find anything. And this thing just keeps going along. Where did that go? You do get some pullback. This one, ROT, it just showed up out of nowhere in the last 3 or 4 days. It's gone from 17 to 30. Interesting. And those will sometimes happen. It'll show up as a new buy, and then it just never looks back. Those are harder, obviously, to trade, but it is, again, it looks like this at the time. You get a day or two of real big moves at $12. You're thinking, and this was also a humongous volume happening right here the very next day. It does it again. The very next day, it does it again. Though if you can find one of those, sometimes they happen. Sometimes they're that's why we use the meal methodology to add a stock each day or multiple stocks each day, is because we're looking for 1 or 2 or 3 of those that have those big run-ups like that. So in terms of customizing what you're trying to do in the software, the methodology is always the same, and that is ideally we're looking for stocks that are already in that upper trend. They're already moving this direction. So this one we did have a trade on in the portfolio, in the muscle wheel portfolio, and we bought it back here. I might have mentioned this the other day, I don't remember, but it was, we bought it back in this area, and it was just, you know, looked like a lot of the trending stocks that we have right now. It'll break out, it'll move higher, it'll pull back. I'm watching this area of the chart right here as I'm dragging this and scrolling this. Just watch up in this area right here, and as it's moving, it continues to move higher. Another big move higher. It just is trending higher. It's a great trending stock, a great momentum stock. It's moving higher. And then they had some announcement on their with their product that clinical trials are really showing improvement. Things like that. It was up it's gone up a couple 100% since that initial entry price. So now eventually it's going to start to, once that downtrend starts to look like this, it's not as significant. It will be for a length of time, but my point is it's always a moving target. Okay, these trends are always sliding to the right. They're always sliding to the right, and if we give too much based on what's already happened back here, sometimes we miss out going forward. Question typed in here: would you say CLSK pattern is a temporary pullback? Let's take a look. Yeah, that crypto pullback that we saw today in the last few days on these is interesting. We had MARA, which had a pretty big pullback as well, and CLSK, which is also a pretty decent pullback. I definitely would watch these because it's a strong uptrend. Bitcoin is still moving aggressively to the upside, and the issue with a lot of these is they have what's called a halving coming up in Bitcoin, to where a lot of these miners are getting their payout, it gets cut in half. So I'm just in watching the MARA report yesterday. That's some of the issue that's happening with some of these. So I still think that they're going to continue to do well, but I don't know. All I know is we're watching for support. At some point, there has to be a stop loss, right? If you're entering into a trade, it moves higher, it ultimately doesn't work, then there has to be a stop loss, because we never know. No one knows what the future is going to hold. We're looking for trends, and sometimes they work, sometimes they don't. We'll get some, in this case, it's kind of surprising. So I wouldn't be surprised. I wouldn't be surprised to find some support here, and for this to be just a temporary pullback in CLSK and all of the other miners. Watch those over the next day or two. They rallied pretty quickly. They moved pretty quickly, and so now, even though Bitcoin is still moving, it could just be a natural profit-taking cycle right here, and a lot of these gains that were just traded essentially are being realized, and watching for a pullback. There could be new demand coming in. It's still inside of that retracement zone where it could very easily find some support right here at this 15, even back down in here around this $14-15 range. So yeah, definitely hold on to these trades in terms of the idea of them. Watch them as they're going forward. If you're in trades and they're being stopped out, then let them get stopped out and wait for another opportunity for it to come back again. MARA for us is just about, it's getting closer to our stop loss 22. So we actually bought this right here. It's had a ton of volatility. The initial stop loss is at 22. Up it goes, down it goes, up it goes, back down again. So this may be, I'd love to see some support above that $22 range, but if not, I'm going to keep that stop at 22 and say sayonara if that's what happens. It's too emotionally draining to get married to these trades and these ideas. They have to just be numbers in terms of what we're putting in, where our risk level is. Otherwise, we just get too attached to the thesis, to the idea of the possibilities, and that's a good thing. We want that. That's why we're investing and trying to grow that capital in new ideas. But the stock price is just such a volatile beast, and so being sometimes it could be the right the right trade, but just the wrong timing. And so sometimes we'll retrace, get stopped out, try it again. You know, if it does that twice, then I'll typically steer clear, but I'll take a trade a couple of different times on new signals. If it's in a nice trend and things are looking good, and it's got the potential to be able to have that upside. There's just we kind of want to find these pockets of demand, and that's really the point of the software. Is it's looking for things that are working. It's looking for things that are already working well, or just kind of a fledgling new trend. But because some of these stocks that are ranked above 90 can move hundreds of percent while they're ranked above 90 or even above 95. They just keep moving and moving and moving and moving. And just because it's high doesn't mean it can't go any higher. Like ELF, these stocks, they just keep trending. Yes, it's a great bull market right now. This will eventually stop, but while it's working, this is the direction that we want to be able to focus on. This obviously is getting a little bit extended at this point, but who knows? You're saying that and when that starts to happen, we get a retracement or we get a counter trend move. Okay, here we would say, yeah, it looks like it's getting a little extended. So it pulls back and has a couple of days of support right here, and then chops sideways, and then eventually continues and breaks out here. So once you get these real strong moves, there is going to be a period of consolidation again, but it's overall, hopefully within these zones that it moves up, it pulls back, it moves higher, it takes its time, does its thing, and we're just, eventually it's going to do this like it did back here. We get stopped out of that final position and move along to something different. Okay, so utilizing the screener, it really is a fantastic tool because it just allows you to adjust the kind of stocks you're adding into your wheel method. Okay, if I want only large caps, then I would focus on these stocks. I'd be focusing on the Metas and the Eli Lillys and the Deckers, the Decker Outdoor. Palantir is moving nicely again. Okay, it's got a nice breakout. It's in this upper momentum zone. A AI stock and getting some momentum, had a big earnings, so they're making money, starting to think things are really starting to look good in that overall direction. But I wouldn't have known. I'm not going to know exactly which stocks and why are doing what technology, and so we just kind of rely on the screener to pull those stocks into our attention. And then from there, it's like, oh wow, yeah, the market is also considering this a good opportunity, and it's trending higher. We want to trust that direction, okay, and trust that decision of, well, the market's moving higher. Amazon, moving higher, big gap on some good earnings, continuing this overall trend. That's a good looking pattern. I want Amazon. I'm going to buy into that. I place a stop loss, and then let it continue to trend as long as it does continue to trend. We're focused on uptrends, and then we're focused on rebalancing. We're focused on that within a portfolio, and then rebalancing those winners. So, for example, if I have, let's go back to the portfolio here, and so a couple of days ago, let's see if I can sort this here. So VKTX it had a massive move. We profited 231% on that, profit of 4,000, starting out with 2,500, right? So we started out with 2,500 and it grew to 2,500 plus this was the profit on top of that. And that was, that is, we maybe get one or two or three of these a year type of trades, really big ones like that, but they really help and they really add up. So, but in this case, what I wanted to do is, how do you decide when to sell and what to sell? So in this case, all I did is I just rebalanced that sale back to the 2.5%. I'm probably not going to be able to find it. Oh, yeah, lucky me, right here. So now I'm back to 2%. So I still own shares, but instead of it taking up 6 or 7% of the portfolio size, then we're just removing the profits over to cash. Mentally, for me, that actually helps in my perspective, because oftentimes we want where am I? wanted to go to here. Oftentimes we think this right here, we're like, oh my gosh, look at those gains. Should I sell them? Should I take them? Should I take all of them? What should I do right here? And now it's like, oh crap, now I should have. Then you start questioning, how much should I sell into this strength? Or if anything, should I sell anything at all, or should I just hold on to it? That's the decision that you're making in advance, so that when you get into this moment, you know what you're going to do. So at the open right here, I sold back all the way at anything over to just the rebalance back to 2.5% allocation. It ended up being a little less than that, about 2%, as I just showed you. So now I still have 2.5%. It's basically as if we're starting all over with this trade. Some people would argue that against that and say, now's the time to double down, okay, buy more of this stock because it obviously is working. And that also is a good approach, but not for this portfolio and not for that big of a gain, not for that big of a mover. I'm going to take something off the table on a move like that. But I'm also going to always keep a portion of the trade. What I want is I want a portion of the trade sold. I want a rally and I want a retracement or a test, some kind of a test of all of this action like it's doing now. So now it's testing it. Now we're going to start to see if this 236 starts to hold up. If it holds up and so we start to get some support here now, we could potentially move even higher. And now we've got that 2.5%. What if it goes up another 100% from here? Okay. Well, we sell half and we take it back to 2.5%. So we're always maintaining that 2.5% as long as it goes higher. At some point, that remaining 2.5% is going to get stopped out, and then we're out of the position entirely. But we want to try and milk that thing for as long as we possibly can and take as much as we can out of it, while reducing and protecting the gains that we do have. So that's the selling methodology that we utilize in this strategy, is continuing to let it go. Now, obviously, you can just flat out go for a stock that's in an uptrend. And oops, I didn't mean to get that one. I wanted to get weaklings here. We could obviously just follow the pattern and go from, if I have a buy signal, I wait for a sell signal. This is not a great example, but for the most part, a lot of times that signal is just additional trend confirmation to the downside. We're using a little different approach we always want to hug the right side of that line. Okay, we're hugging the right side of the chart for the most part on all of our stocks. Let's see if there is, but I could certainly use that as my flat out strategy, and that would be right here. We're buying here, we're selling here. Okay, we probably would have been stopped out. That's why oftentimes the sell signals come really close to where we're going to get stopped out anyway. So when we're talking about them and I'm updating those, it ends up being close anyway. But we want to make sure that we're always maintaining a stop level. Now, if you would like to join me in the muscle wheel portfolio strategy, I've been putting a link below at the end of these videos, and it's a daily morning access to my Discord channel. It's very simple, very easy to use. As far as what I post the trade for that day, the stop loss, and then essentially we go through and we talk about this portfolio, and we talk about what are we doing now, what are we doing next, where's our stop losses, are we adjusting stop losses, are we taking gains on any of these, what are we adding in new for the day. That's everything that we discuss in that setting, and I'd love to have you. That'll do it for today's update. Everyone have a fantastic day today. Bye now.